Good morning, IAMB members and partners. This is Jason Ernest, President and CEO of IAMB, and I'm very excited to welcome you to this morning's webinar, one that I think will be very well received, Interpreting P&C Insurance Trends and Opportunities. Before we begin with the webinar, just a couple logistics to go over the usual for our webinars at IAMB. First, this will be recorded so that you can share with others in the office. If you want to come back and review again, just know that this will be recorded and we'll be providing a link to that shortly after the completion of today's webinar. As I mentioned in the chat feature, we have all the attendees muted. We have a fair number of attendees for this webinar, so you are muted, but we do want to keep this casual and interactive. So throughout today's webinar, throughout the next hour, should you have any questions on anything that is raised, please submit questions via the chat feature. I and other IAMB staff will be monitoring the chat, and we will be submitting questions to Paul if they're timely to what he's discussing at the moment. We do reserve some time at the end to address any lingering questions. I'll also be providing contact for an IAMB staff person that is managing this resource, and you'll be able to get questions, comments, feedback to this individual. I'll provide that at the end of the webinar so that you have contact information here. A couple logistics about today's webinar. First and foremost, this is the first year that we are providing these P&C Insurance Trend reports. We think this will become a regular and frequent update. We think that this will be, as I mentioned, well received, but this is the first that we're presenting this data in this type of report format. So please provide us your questions, provide us your feedback. That'll help guide us in how we present these and what follow-up we may have in presenting this data to you. Full reports, Paul will be providing highlights of the 3 state reports. Those full reports will be available on the IAMB website immediately upon the conclusion of today's webinar. We'll provide you instructions and links on how to access that. It is password protected. This is a member-only benefit, so you will need your password in order to access these full reports, but we'll provide instructions on how to get to those reports at the conclusion of this morning's webinar. These are state-specific reports. So there is a report specific to Pennsylvania, Maryland, and Delaware. Please keep in mind that over the next hour, Paul's going to be providing highlights of these reports, examples of what's data is in them and how they can be used. So if you see an example from Pennsylvania, that could be used obviously in the Delaware report. If you see a Delaware specific example, just know that that also applies in Maryland. So while we may be providing specifics during today's webinar, know that there are state-specific reports that you'll have access to. Again, please submit any questions via the chat feature. We'll have an opportunity later in this session to address questions, but we'll do a good job keeping this casual and getting that information to you, answering those questions as they come up. So with that, let me introduce Paul. Paul, if you want to turn on camera, microphone, and get set up here. And we'll begin screen share with Paul. He'll get his screen up here in a second, but I've had the pleasure of working with Paul for many years. Paul, how many years were you at the Big I?
21.
21 years.
There we go. I was gonna say I was locked out from my ability to share my camera and take over the screen share.
We got you. So good. So 21 years at the Big I had the pleasure of getting to know Paul. He became both a colleague and a friend during that time at the Big I. And one thing I can tell you about Paul is attention to detail was evident for sure. You certainly had that knack to be able to dive into things and get at it. And now in this new endeavor, Real Insurance Solutions Consulting, now that you're officially retired from the Big I, the ability to get into this data and provide it is what's very interesting. So I've had the opportunity to preview this, something you've been doing now for the better part of a year. We're excited to be part of, and with that, I'm going to allow you to take over the show. Your screen is up, so we are ready to go. Again, participants, submit any questions via chat. But with that, Paul, the show is yours.
Thanks, Jason. Thanks everybody at INB for the opportunity. And I guess I kind of view my role in working with Jason and his colleagues in the other Big I states as almost a data apple seed, if you will. Sharing the rich data environment that we operate in, and it all things kind of come full circle. My background, going back to the beginning, I'm oftentimes one of the older people in the room, so I do go back a ways in my insurance career. But I started out as an independent agent in Wisconsin, and then from that, got some insurance-specific training in the finance realm, and really took it in a more consulting actuarial direction. So from agent to more actuary, and then I ended up at the Big I for 21 years, kind of deploying what I had learned both as an agent and on the actuarial risk management consulting side. And it kind of comes full circle. So now here I find myself working with approaching 40 of the Big I states and the National Association. And as I said, spreading the I think, insights as to what we have in our industry in terms of data. Insurance was one of the big data elements that you could look to, along with banking and several other highly regulated areas. But insurance stands tall in terms of being big data from the very beginning. And as an agent, I would have loved to have had this resource in Wisconsin. I would have understood my world much better and had a frame of reference that was more accurate in a way that was largely available back then, not quite the same way in 1982 as it is to today in terms of the data depth, but it would have helped me a lot. And that's really my hope in doing this. And when we have these webinars, is to introduce member agencies to what their state's making available to them in state-specific versions of the industry data. And it's also very much an insurance agent's view of the data. Oftentimes when you're reading Insurance Journal or AM Best, and this is no slight against them, it's a little different perspective than we think about as independent agents. We're thinking about, what did we write? What's the line of business? What's the loss ratio? Oftentimes that more national media attention focuses on insurance company results, which are usually after reinsurance. That makes a difference to us, because we really want to know what happened in Delaware or Pennsylvania or Maryland on the lines of business that we're writing. And so it's that focus that we're really going to delve into. And the 2021 P&C Insurance Marketplace summaries will be available to you, as Jason said, in not very long, I guess later today. So my goal today is, it's impossible with one state in an hour, much less 3 states, to really do justice to what the data can do for you and your agency. My goal is to make you aware of the data and the important distinction that, while it's always been available, it's a lot of work to break down the data and put all 3,000 insurance companies into 51 different insurance buckets, and then look at it with a Pennsylvania viewpoint, Delaware, Maryland specifically, or any of the states that I do the summaries for. So that state-specific nature is really important, and it means so much more. It would have meant more to my clients when I was an agent to talk about the Wisconsin other liability business if I was talking about a D&O renewal with a community bank, for example. But this marketplace summary, we can't cover it all, but I just want to highlight for you what's there, and then hit some of the high points that I hope, and Jason and Claire hopes, that will inspire you to think about the data as you go through your everyday lives, knowing a little bit more about the resource that you have available to you, that in and of itself really only scratches the surface. But we hope that it becomes a tool that you turn to, and then if there's more data needed, you'll know and have a sense for what that data is. So we certainly look at the premiums here. You see a chart. It's just an example. Don't pay any attention to the actual dollar amounts, because we'll get into that. But we look at the overall premiums in the state, and we look at the growth rates of that data. We'll look at the losses on a calendar year basis. for 5 years. So you have a little bit of perspective. Was it a good year or was it not a good year? And is it higher than average or lower than average? And we'll look at that a little bit more detail on how we look at those losses and the loss ratio we use. And then another component of this, and maybe this is a little bit more with my association hat on, but we do look at the distribution styles. Every insurance company has the opportunity in something called their gallery report to designate their marketing type or types. We use that data and we put those insurance companies and then their ensuing data into different buckets. And we put it into an independent agent bucket, obviously, because we care about that as industry advocates for independent agents. But we also look at our competition in the exclusive captive realm, whether it's State Farm or on the direct side, a well-known company to all of us. And I used to live in Maryland, by the way, Geico, just because of their location would be an example of a direct. And then there's a little bit of unclassified or other, usually about 1% of a state's data. So premiums, losses, distribution style. We get into the weeds a little bit, not because it's necessarily super useful to look at what the average commission is for surety in Maryland. It's good to know. It's a nice thing to have as a benchmark in your mind, but it's more to show you the potential of why that data is there, and then how you might use it in your own individual agency to look at the markets you use or consider, and what the upsides to knowing what that data is and what some of the limitations. We'll look at, I think it's interesting, working with Jason and Claire, we took a little bit of a dive into the trends in commissions. And we looked at that, I think, in Pennsylvania. I'll remember when I get to the slide. But not so much because there's a big conclusion there, but to show you the potential for what you can do with the data when you have a question. Obviously, if you've got the 52 buckets of premiums by all 3,000 insurance companies, you can look and see who is the top insurer on a line of business or in a state. And then, of course, we are very interested as the association and as advocates for all of you on how independent agents are doing in terms of their penetration of their marketplace. The National Association in particular really likes to pay attention to this because it's important, right? If we're growing, that's a good thing. A rising tide helps all of our independent agent boats. So we look at that, and I'll show you some of that data. And then near and dear to my heart, I really like highlighting the surplus lines information that's available by state, by product, because I want to make clear to everybody on the phone, when I was at the National Association, our most important for-profit program in my area was the E&O program. And surplus lines is an E&O risk. So as surplus lines is growing, and we'll see that it is, you as agents need to be aware of that growth and manage it, right? Because it's a slightly higher E&O realm when you're placing a surplus lines policy that's replacing an admitted policy.
Paul, in your introductory remarks, you mentioned, you wish you had this as an agent, or agents need to pay attention, recognizing that IMB members also comprise our partner carriers, some of whom are on the call today. You're getting a lot of interest from the carriers out there, and they have equal interest, and I think use in this data, obviously, as well, correct?
Correct, right. So, yeah, a lot of follow-up. Of course, I started this with the Big I states, and so it's really focused on a member agent's view of the data. But obviously, if you're an independent agency company, we're joined at the hip, right? So we're interested in this in the same way. And many of the follow-up conversations and some of the deeper dives that I've been engaged in to look at this or the other thing have been with company partners of the Big I State Association. So yeah, great point, Jason. And so for all of the company partners on the call, if you have a question, I take them every day. Give me a call. I mean, if it's a lot of work, I'm a consultant, right? So I usually return with, well, I can do that for you, but it might cost a little consulting money. But generally speaking, quick questions I'm happy to answer because I feel like that's my goal in being the data apple seed, if you will. This slide that you have in front of you here, the Yellow Book Road, is kind of a play on, obviously, the famous movie. But the Yellow Book is, when I started and I was at the Wyatt Company, over 25 years ago, We used to actually have books that looked exactly like that example in the middle on the top there. It's called the yellow book because property casualty companies have to file with their regulator every year, both annually and then quarterly as well, something they call the yellow book. I think specifically the yellow book refers to the annual, but with that over categorization aside, that's why this is the yellow book road, because that's where this data comes from. Every insurance company has a domicile in one of the 50 states of the District of Columbia. And they have to file this yellow book per the NAIC instructions. It's very exacting. There's very tight definitions on how all the data is filed, and it's audited, and it's how the insurance companies are tracked by their primary regulator, their domicile state. Well, we can use that data because the NAIC makes it available in aggregate format for companies like the one that I use, AM Best, in their financial suite, to be able to pull and slice and dice the data. So I won't belabor it. I use custom reports and industry reports to arrive at what you see on the lower right there, which is a snapshot of the first page of the report and how I deliver it to a big I state. Having said that, yours may not look exactly like that because I give it to them in a format, the states, where they can tweak it. But some big domicile states are represented in the room today. I mean, Pennsylvania is a large number of carriers are domiciled there, as is Delaware. And so that's why those states are highlighted in green. So let's get into it. Here is what we see in the United States report that I do for the national, but I put it up here for comparison purposes. This is in 2021, $785 billion of P&C premiums in the United States. And you can right away see that from 2020 to 2021, it grew faster than in the previous years, and the average growth rate was 5.5%. Interesting in its own right, some COVID impact, some slowdown in 2020 probably resulted in that. But I don't think that trend is going to slacken. And we are seeing that. And it's interesting to me that when we look at Pennsylvania, and I'll put Maryland and Delaware up here as well, that this is a part of the report that you'll have access to, and you can look at that. So it's kind of nice as a benchmark to know, are you growing faster or slower than the national over the last 5 years, and in the last year that's available fully, are you growing faster? Now, for some perspective, I can tell you that the fastest growing state in the United States from 2020 to 2021 is South Dakota, and they grew at 17%. And there's a number of reasons for that, but the main one is their multi-peril crop insurance is such a heavy footprint on that economy that it really has grown a lot with increasing multi-peril premiums in general. The lowest growth rate in the state was Vermont at -6. So if that gives you a little perspective on your state, whether it's Pennsylvania, Maryland, or Delaware. We'll look at, and you have access to in your report to see all of the individual data on 26 lines of business in the full marketplace summary. And so you can look at individual lines of business. For example, the line of business that grew the fastest in 2020 to 2021 was actually private flood, which is kind of interesting because a lot of carriers are looking at that as a complement to the federal flood program. And of course, Pennsylvania is a famous flood state by anybody with an eye towards history with the Jonestown flood. MPCI is the second fastest growing. And interesting to all of you in the room, you'll probably want to turn to that page for other liability claims made if you do any directors and officers or errors and omissions or standalone cyber. That's the third fastest growing line of business.
Hey, Paul, good question already. It's come up. You mentioned South Dakota and crop, but we're seeing growth in our 3 states at a pretty good rate. Do you think that's also, maybe this will come up in a little bit when you get into distribution, but actively going after captives, does this growth mean that we're taking away from captives or directs? Is that a natural summary of this?
I'd like to think so, right? But it's a great question because it does point out a limitation of the data. It is premiums, and what ultimately makes up premiums is new policies or lost policies, but also the rate and the rating base of those policies. So we have to be cognizant of that. It's conceivable that you could have less policies and more premium if you got more expensive ones.
Right.
But I say I'd like to think that independent agents are growing, but I think they actually are. I think it would defy some of the numbers on some of the lines, like homeowners in particular. Independent agency companies are growing. You and all the members on the phone and the companies on the phone would have a better feel for Pennsylvania, Maryland, and Delaware. But when you look at the Western states and problems, usually insurance problems are good for independent agents because we're good at solving problems. And homeowners is becoming increasingly a problem. And I think we're seeing real growth there.
I would agree. And then the top three lines: flood, cyber. What was the third? Repeat that, please.
In terms of the fastest growth rate, it was
Yes.
private flood. Multi-peril crop was number 2 in terms of the fastest growth rate. And this is nationally, and then other liability claims made. Now, it makes a great point that might not be the case in Delaware. And the cool thing about the data is that an independent agent in Delaware can look and see what was their fastest growing line and how fast did it grow. We'll touch a little bit on that too as well to give a good sense on that.
And a clarification on Delaware is also not necessarily the captive insurance carriers, but the captive marketplace as well. And Delaware, as you may be aware, heavy emphasis on captive insurers and that ability, and is that perhaps some growth too. So again, these are all, and I'm glad to see that members are already taking this data and making, and that's the whole point of this, is take the hard data and then we can look at trends and where it may be coming from, and each state's going to be unique in that. But a point made that Delaware is heavy with captive and captive business, and perhaps that's where some growth is coming from. So remember, first year of presenting these reports, we're going to be looking at these trends, diving into it, and keep in mind what Paul is showing here is highlights of the full reports. I think once you dive into your reports and look at them, this will all kind of make sense as well. So keep the questions coming. Paul, go ahead.
Sure, thanks. So let's give a little perspective on the premiums and where the 3 states rank. So I mentioned before, $785 billion is the entire United States property casualty premiums. That's 50 states in the District of Columbia. I don't include in that number Puerto Rico, Guam, and Virgin Islands, and some of the business that's deemed alien or Canadian. So 785 billion. Here you see where we stack out in our 3 states. Pennsylvania, obviously, people may not be aware of it, but I mean, with Pittsburgh and Philadelphia and a large economy in between, it's a big state. I mean, you're up there number 6 in terms of total premiums in the entire nation. California being number 1, Maryland number 2 at 14 billion. And Delaware at 3.3 billion. So it's kind of interesting that you kind of cover a waterfront there, Jason, in terms of the states that you oversee, from one of the biggest to one of the smaller. And it's interesting to look at the data, but it's also important to keep that in mind. Overall, the IAB marketplace is about 6% of the entire United States.
And I think good example of the question raised, Delaware, very small state, but the fact that it's not at the bottom of the pack there shows that they're doing some interesting things, and I think there is some trending to be seen there. So yeah, good.
No, good segue, Jason, because I was going to make the point that Delaware, while small in total premiums, actually packs a lot of pound for the punch, I think is the way to say it. By looking at the per capita premium, and this has got some limitations, obviously, when you take the population of the United States and divide it into 785 billion, you get 2,369. It's not a great number. It tells me some things, but it does allow you to show the general insurance market size based on the population of people in the state. And here you see that sort of descending bar chart that you can see that, interestingly enough, North Dakota is the state with the highest per capita premiums, and that's a result of low population, relatively speaking, and lots of crop insurance is the answer to that one, if you're curious. But here you have Delaware, and this is my point on pound for the punch, or punch for the pound, or punching above their weight. Maybe that's the way to say it. Because the average per capita premium in Delaware is higher than the other 2 states. which I think is interesting. I wouldn't have necessarily guessed that. Maybe I should have. But that's a result of a little bit lower population, but more of a concentration on commercial coverages, as we'll see in the state of Delaware. And then you see Pennsylvania and Maryland being both geographically and probably not that different when you think about urban to rural to the suburban in between. They come out at about 2,200 in average per capita premium, which is very close to the national average. The lowest is Ohio, which if any of you in the western part of the state right in Ohio, you would know that workers' compensation, as is West Virginia right next to it, is not a huge part of an agent's premiums in that state because of their monopolistic fund in Ohio. And I think, I won't even say, but I thought West Virginia maybe got out of that monopolistic realm. So loss ratios, let's switch gears a little bit. Let's look at the loss ratios. The bigger the net, the more stable the loss ratios, even if you've got huge events in it. When you look at the United States, we're always going to be in the 60-ish realm unless something really dramatic happens like 9/11. But for the most part, that's a fairly typical picture there, and you can see where it is, and it's heading up, which is not inconsequential. Part of the premium givebacks because of COVID, I think impacted that a little bit, but so too as the return to the economy and more driving and what we've seen in distracted driving. Pennsylvania picture, and then Maryland, and then here we have Delaware, a little bit bouncier. I think it's a little bit bouncier the smaller the premium base, with Pennsylvania being the largest. But you can kind of see where it squares out. And this isn't so super interesting in its own right, other than it points to what you have available for you in the lines of business that you care about the most. But the other thing you can do is you can look at the 5-year average. And this, of course, is not averaging the averages. This is actually all the losses and all the premiums. So it's a true average. You can kind of see where you shake out. Good states to do business in. That's a lot of underwriting profits in every percentage point. So it's nice to not be north of 62, right? Because that's usually going to bring with it some corrective actions overall, or more of them. Not a lot to share on that, other than we can put in a little more perspective by looking at the same sort of a chart. Let's look at how the United States stacks up and who the low loss ratio states last year, 2021, were versus the high one. And of course, with Hurricane Ida, Louisiana has a very, very high loss ratio last year. That is one of the highest ones, at least in the last, that is the highest loss ratio for a state in the last 10 years. Very tough year, super difficult environment. And for Louisiana, actually followed a year that was not great before that with another hurricane. And Ida was no small deal. They're talking about what seemed to me, and I didn't go back and do the comparisons on today's dollars, but that event was something in the neighborhood of $70 to $80 billion in losses. So it's getting up there at the higher levels of all-time hurricanes. But here we can see the states that we care about on the call. There's Pennsylvania, 58, 54, and Delaware that we saw. The lowest loss ratio last year, always a great place to be, Vermont. And you can see the other states that get up high. North Dakota's loss ratio is driven by multi-peril crop in 2021. Penetration rates. So I'll get into this a little bit in a moment because it's always of interest exactly how do we come up with these numbers. But this is the top 10 lines of business as written by independent agents in the United States, and this is their penetration rates. 62% overall average penetration rate in the United States as it's measured, and we'll talk about that a little bit on how that's done. But you can see that the two largest lines of business, because they're so big, even though independent agents have I won't say a low penetration, we'd love it to be higher, right? There's growth potential in personal auto and homeowners, but obviously we're up against the billions of dollars that are spent in advertising in some of the non-independent agent focused companies that we always see on the nightly news or the Super Bowl. But here's our other states. I'll put those up and talk about a few things here. Pennsylvania, you're above average. That's a nice place to be. That means independent agents on average write more premiums than the USA average. Looking at some of the lines, a little bit higher on both personal auto and homeowners than the national average. Some strong companies, obviously, in Pennsylvania, marketing to independent agents. And then you can see all those tall bars. If you can't quite see the writing, it's lines of business that independent agents are good at, because they have to be explained. They usually have to be customized. Oftentimes they're commercial. So after homeowners, you've got other liability occurrence, which would be contractors come to mind for me as a big part of that. Certainly umbrella liability, workers' comp, commercial multi-peril, commercial auto, other liability claims made, which, as I mentioned before, is an interesting combination of lines that are written on a claims made basis. Not medical malpractice. That was carved out by the NAIC process as its own standalone line. But it does include errors and omissions, like your own errors and omissions, is in that line of business, other liability claims made, as is directors and officers, and standalone cyber would be the big three. There's a lot of things in there. I don't want to minimize or downplay a line of business that maybe you specialize in your agency that's in any of these. I'm just trying to hit the high points. And then in the marine and fire, and then allied perils, which those are split out, but actually I've never seen a fire policy that wasn't written with extended coverage. So I think practically speaking, those two lines of business are one, but by virtue of the process.
Paul, you had mentioned at the beginning you had wished as an agent you had some of these reports and data. I'm looking at this slide and thinking, as an independent agent looking to expand their book a little bit, or perhaps get off that personal line, personal lines, commercial lines ratio, and shift that a little bit. I'm looking here and saying, this is where agents are at, and if I don't have an entry point in some of these markets, I might want to look at it. Correct?
Correct, right. So the one that I'm seeing growth in, and I think agents are doing that naturally, it's an intuitive reaction. We're seeing that growth and the problems in homeowners, and some of the questions that are coming from the homeowners line of business, like, is this covered or is it not? There's lots going on there. And so I think that's a great example where agents are growing. And well, Jason and I were just with all of his colleagues at the other state association executives at their annual meeting, and I pointed out in my data presentation to them that the line of business that grew the most commissions last year for independent agents was homeowners.
Yep.
It by far and away is something that I think is an opportunity. Personal auto is challenging because of the commoditization. I think if we talk to people, they don't read their policies, and they don't understand that unless you have a conversation with them, that there is a difference between one policy and the other, and advertising just drives people towards price. But there's certainly opportunity in the personal auto realm for independent agents. And then, of course, you can see the Maryland and Delaware. And then to look at Delaware, Delaware looks different on a couple of different things: the per capita premium, but also the ordering of the premiums in terms of through independent agents. You can see that automobile private passenger auto actually falls behind homeowners, and homeowners falls behind 4 lines in front of it. There's just less of that business in Delaware, I think, because there's just more commercial lines opportunities. The other thing I would point out that's very Delaware specific is the low penetration of commercial multi-peril is actually the result of a very specific situation in Delaware where Claire actually identified it for me. And I looked into it. The Nuclear Electric Insurance Limited is a very important insurance company in terms of nuclear facilities across the country. And all of those premiums flow through Delaware. And that's written on a direct basis, is how that company designates their marketing type. And so obviously, if you have a giant chunk of premium like that, the nation's nuclear premiums flowing through a line of business, and then that's suddenly direct, where in most other lines, there would be a better independent agent portion of that. That drops that down to the 40. Although it is growing for independent agents in that line in Delaware. And so let's look a little bit at the lines of business and how they stack up. I think you got a sense of that in the ordering from the bar charts, but the annual report, the annual summary does have the top 10 lines of business as written by independent agents. In the United States, the #1 line, even though our penetration is relatively low, the premiums are so dramatically large in private passenger auto that 18% of all the premiums written through independent agents in the United States are private passenger auto. Next in line is homeowners, followed by other liability occurrence, work comp, and so on around the pie chart in descending order. Again, those are dominant. Most states find that private passenger auto and homeowners are also the #1 and #2 line of business for independent agents in their state. And that's the case in Pennsylvania with the 18.6 billion in premiums written through independent agents. And then we've got Maryland, where you've got the same order, largely the similar ordering and charts. There are nuances that would be important to me as a Maryland former resident. But you can look at that on your own with the Maryland summary. And then you have Delaware, where you noted maybe from the prior bar chart that there's a little different ordering of the lines of business, and homeowners and private passenger auto actually fall down in the ranking of what's written in Delaware. And so I think, Jason, to your point, that even emphasizes that point even more, that there is opportunity there, both from a penetration standpoint, but realistically, there's not proportionally as much private passenger auto and homeowners in Delaware.
And Paul, on these charts, do you have enough historical data to say, so well, private passenger auto and homeowners are that portion? Has it been stable at that, or are you seeing a slow decrease in that emphasis with some increase on commercial?
I'd have to look, Jason, I don't.
Okay.
The data's there. And the data is there. Actually, you'd have to look at all the 26 individual lines, but you could pull out the personal auto and the homeowners in Delaware, look at that and see if the penetration was increasing or decreasing. The numbers are there, but I didn't specifically look at it.
Sure. No, and to the attendees, those are the types of questions as we look at this for the first time, as we work with Paul, and this becomes what may be quarterly updates, annual updates for sure. We'll want to hear feedback from our members as to what's important. As you see what's there, and as long as the data is there, and chances are the data is there, we can cut it and slice it however we want. So, think about some of those distinctions that you'd like to see, and we can pull it now and in the future as we present these reports and look at trending. We can focus in on certain areas. So keep those comments and questions coming in that aspect.
Perfect. And I do encourage you to work with the IAMB staff with suggestions. This is the second year that I've done this. The first year in Pennsylvania, when I did it the first year, it was more of an early effort with less states. And I can tell you that the report improved in the first year because of feedback from member agents. And now it's improved in the second year from that. And I suspect it'll improve again in the third with the limitations of the data. But this is one of the things that actually grew out of the very first year was, can't we look at surplus lines as an individual line, not a line, an individual, it's not a distribution strategy, it's a thing, right? It's the license that the carrier used to write the premiums in the state. And this is important from an E&O standpoint. And I want to get to some of the other stuff, so I'm not going to take a ton of time other than to make you aware that this is there. This is the United States data. And then I'm going to give you the individual state data. This is growing. And an example was made clear to me in some work I'm doing for another agent that's got a cyber liability program where more of their premiums are shifting to the surplus lines sister carrier because of the challenges of cyber liability and not being able to get the flexibility in form and rate that the coverage needs in order to be placed in an acceptable way to the risk taker, the insurance company. So be aware of the trends that we're going to see here. So we've got, first of all, the average utilization in the United States of surplus lines is higher than any of your 3 states, Jason. Delaware, Pennsylvania, and Maryland. You all are using surplus lines less than the other states on average, right? There are some states that are higher than the United States average, but your top lines of business are other liability claims made and occurrence, and then fire in Delaware and Maryland, and med mal in Pennsylvania. And here's that shakeout. I didn't want to take up too much room, but here's where you stack out in terms of the utilization of surplus lines in the United States. You see the United States average is way to the left. That's that 8.3. And it's skewed by some of the high utilizations of surplus lines. The highest one, interestingly, is very close to you in the District of Columbia, but that's not skewing it up. But California and some of the other ones that are higher than 8.3 and large premium states are bringing that up. But here's just the part of your individual state report that you can turn to, and right away you can look at the top and say, oh, Delaware looks like it jumped up, and it did, and it's probably because of that largely commercial nature of the average premium written in Delaware. And in fact, I can see it, you guys probably can't, and I have my glasses on, but other liability claims made is the #1 line of business written in surplus lines in Delaware. And I suspect that being the corporate headquarters of so many, that's probably directors and officers liability, but I suspect it's also standalone cyber. But they're all growing. So when you get that non-renewal and you can't find it in an admitted market, make sure you document your file and have that conversation and emphasize the importance to your insurance to read the policy, because it is not as regulated as the policy they were leaving, if that's the case. There's that med mal, and then here's the fire in that order. But I thought it was interesting that med mal popped into the top 10 in Pennsylvania. Here we've got
Paul, real quick, just
sure.
back to specific lines. A very good question on whether it be personal or commercial umbrella policies. Do you pull those out, or are they lumped into the other liability section? And I think I know why agents are asking that. Umbrella being a good cross-sale opportunity, something that we're pushing to our members as a growth opportunity. But personal or commercial umbrella policies, how do they show up? Do you know offhand within your split?
They're going to be another liability occurrence.
Okay.
Unless by virtue of some relatively strange element, it was a claims made umbrella, which probably exists, but not what I've seen a lot of. So it's going to be other liability occurrence, and both personal lines and commercial lines are going to be lumped together. The total premiums are going to be dominated by the commercial. You can get at some of that detail, and that's good for your members to know. When I get a question that you can't really get from the data, you can turn to the rate filings that carriers have to file on the admitted side, and draw some good distinctions if for business planning purposes someone's looking at something that they really want to get a marketplace estimate of the premiums. Rate filings sometimes can be helpful, and then turning to the industry data, you can sometimes tweak it that way.
So there is the ability, that as one example, but others where we might be able to extrapolate from a larger group and look at a specific line if there's interest in it.
Yep. And so definitely have done some of that. RLI, for example, a good friend of all of ours on the standalone personal umbrella side, they're going to be another liability occurrence. That's where their rate filings are going to designate that premium and losses fall.
And a quick note about the reports: when you finally do see these, there is a comprehensive appendix to the report that will define the lines of business for you. So I think as you have some questions about what makes up a specific line, the appendix to the report is comprehensive, and I think will be very helpful. So go ahead, Paul.
Sure thing. So changing gears just a little bit to give you background on those marketplace distinctions, like how do we say that independent agents write 62% of the premiums in the United States? Well, more accurately stated is the insurance companies that we deem relying on independent agents write 62% of the independent agency business in the United States. Now, how do we calculate that? I mentioned the gallery report, and here's some examples of what shows up in insurer gallery reports. These are, I think I give us some data in a minute here on the other states as well, but this shows you how we calculate the independent agent footprint. We include not only the pure independent agency companies that probably are actually physically appointing the agency and the employees needed, but we also look at the managing general agency insurance companies that put that in their gallery report. And we also go with IE mixed and add that. It's a very small percentage, quite frankly, but those three added together are what make up that 62%. Very, very clear, very methodical process. In the report, you can look up the carriers. You might not agree with the categorization of a carrier based on how I did my formula. Or that you might say, well, we really don't need to include the IE mix, and that's a lower percentage. I grant you that. But for the most part, it feels like that's the independent agent focused carriers that are used to using independent agents, or things that feel like multi-choice carrier approaches to the market. And then of course you've got your examples, and again, these are Pennsylvania, of our competition, the big exclusives, State Farm, some of the Allstate companies, not all of them. Nationwide, again, not all of them. And let's take it off there. Oh, LM, General Liberty Mutual Company. And then you've got the direct companies, the Progressives and the Geicos that we know so well from the DC area. And actually, interestingly enough, those Geico companies generally aren't domiciled in Maryland. A little trivia, they're generally domiciled in Nebraska, if I recall correctly. And then there's a few always that don't give anything, or they're deemed inactive. Again, that's less than 1% of the premiums. But that, if nothing else, gives you a little bit better sense as to how those penetration figures are arrived at. And Jason, I'm just looking at my time. I want to leave enough. So I'm not gonna gloss over this, other than to make the point that the top 10 carriers, the top 100 carriers, the top 3 carriers, they're all available by distribution style, but also by state and also by line of business. So we've, Erie is one that I know well. When I was in Maryland, that's who insured me in my house was Erie, and I got it through an independent agent that was a member of actually ended up on my board of directors for a while. But you can see the carriers that are big in Pennsylvania, Maryland, and Delaware. And Jason and Claire, if you guys are going to give these PowerPoints to, I'm totally fine with that. They'll have this on the list. Here's the MGAs, same exercise where we're looking at the carriers designated as such. And here you've got the insurance company. And a lot of times I like to give the group or fleet because it adds a little bit of an insight for me. If I don't know who, I don't know, Houston Casualty is a great one. If I didn't know what, and they've not been a member of Tokyo Marine for a long time, but if I didn't know who Houston Casualty was, it's nice to know the group. So I usually try to give that information as well. And then here's our IE mixed top 10 in the 3 states. And Jason, I'll pause there if there's something that you think I should spin out on, but I wanted to get, and I was just sensitive to looking at the time.
Sure.
We want to keep rolling to get to the 2 other, the commission example, and then just a little bit of an individual carrier look at the data, looking at a specific company.
Well, I think commission's going to be of most interest to the attendees. So let's continue there. Everybody's been doing a good job of submitting questions via the chat, and I just sent a reminder. So as we, wrap things up for the last 10 minutes here, and Paul, don't gloss, do what you can to get through those because they're the important ones. Just submit your questions via chat, and we'll make sure we get them to Paul. But yeah, keep doing what you're doing, Paul.
So this is my attempt to inspire you to look at this page, that when you look at it, you go like, oh my goodness, there's a lot of numbers on there. This would be a tough page to go over with somebody right after lunch because there's a lot there, but there's a lot there when you need it. That's the point. And so that's what I'm going to show you here. This is one of 26 pages in each of the state reports. So personal auto, homeowners, commercial multi-peril crop, private flood, aircraft, workers' comp, all of them have a page like this. And what can you see on this page that might help you understand your market a little bit better? Well, first of all, you can see the total premium in that line of business in Pennsylvania, 9 point something billion in personal auto premiums in Pennsylvania, all distribution, all in, independent agents, exclusives, direct, other, right? They're all in that number. The upper right hand, we put that the place that they exist, that line of business exists in the top 10. We give you that as a thumbnail. If you don't see that pie chart on the page, it's not in the top 10. If you see it in there, if you see it up there, you know, like for example, this is the #1 line of business in Pennsylvania, it jumps out at you. So that's the reason it's there. The growth rate in the last year, 2%, that is provided in the numbers below. The 5% average is provided in the graph above. The loss ratio in the last year, and then the average loss ratio for 5 years for the line of business. The penetration rate, which is simply the calculation, the highlighting the lower blue, lighter blue bar at the bottom, that's the independent agent designated premiums for the line of business in the state. And then obviously the one divided into by the other is the penetration percentage. We also give you the active number of insurers in the state that are writing at least some premium in the state last year. And that can be more interesting, usually on a nichier line. Like let's say you were thinking, gosh, you know, I should get a private flood market. Well, how many are there? You can answer that question on the private flood page. And are they all independent agency carriers, or, you know, who's the direct one? That sort of thing. We give you, those are the carrier numbers. And then we give you the surplus lines. And in personal auto, as many of us would probably guess, such a highly regulated line of business with non-standard taking the tough risks that many, many years ago, decades ago, would probably have been surplus lines. You can see the percentage on any line of business that is surplus lines. And in this particular case, I think there was $31,000 in Pennsylvania. I'm not sure what that person did to deserve that, if that's one policy. But there is one policy in surplus lines, or at least that's what the data says, whether it was or not. And then you see your top 5 groups. You see the top independent agency carriers, the top exclusive, top 3, and the top direct. And at the very bottom there, it's actually the top risk retention group when there is one. So the commercial liability lines, you'll see the top risk retention group at the very bottom. So I wanted to hit that because that page would be easy to gloss over if you didn't fully appreciate all that's there. And it's not like it's light reading, like you don't read it like a book. You want to know that it's there and that you can turn to it. So here's an application of the data. Chatting with Jason and Claire, we were thinking about, well, what can we do that's kind of interesting? Well, this commission thing, I pointed out that every carrier in every state they do business has to provide their commissions paid by line of business in the state. So here's the United States data, the average commission across all lines, all distribution, 11.5%. Not super useful in and of its own right, but your knowing that it's there is helpful because you can investigate that. But I wanted to give you a little bit more insight so you walked away with something that maybe you'll remember after today. And that is those commission numbers include contingencies as reported by the insurance company, by line of business, by state. Unfortunately, you can only peel away the contingency portion of the commission for the entire company for the whole United States. They don't ask for that state by state, line by line. You can get it from the insurance company in the overall view of the company. What are their contingencies? And there's no, I didn't have to do 10 years here just other than to show you that it's fairly stable. The average commission, the 11.4, right there is that 11.5. I think it's 11.46. And I think I just cut it off and I didn't round it up like I should. That's the same number. That's 11.5 in 2021. But you can see the straight commissions that we all get on a by policy basis. And then the contingent portion of that, again, across all carriers in the entire industry is about 0.8%, a little bit less than 1%. And I only point this out to you because I want you to remember that when you look at a commission number that you do have to account for the fact on any individual review of that data that contingencies are in there, which can be a much bigger deal on a a very exclusive independent agency company, they're going to have more contingencies, probably on average, than 0.8%, because there's a lot of carriers that don't pay any contingencies for whatever reason. So keep that in mind. But we did want to look at some trend data. This isn't super scientific, but we said let's look at 4 lines of business to make the point that we can quickly pull from the data. The commissions, personal auto, you can see that the overall, the gray line, I shouldn't distract us, the next chart. The overall gray line is headed downhill a little bit. The yellow line is independent agents. Independent agents their premiums are in the gray line, but it's heading down. And that's more of the direct carriers that don't pay any commissions or pay very low commissions, driving that down. And independent agents I look at that trend line, and I feel like it's pretty flat. You can see that it's probably contingencies that are bouncing around the average line. Same thing with commercial multi-peril. The lines are closer together like this because independent agents write so much of the commercial multi-peril that you might expect that the overall average, when something makes up 80 or 90% of the overall, is going to be very similar. So not a lot to walk away there. Commercial auto, a little more activity there. Independent agents are, again, the lines are close together, but they do look like they're pointing downhill. And I think we are seeing more commercial auto competition, and maybe that's based on lower commissions being paid through those other companies. Here's the one that jumped out at me the most, and that's homeowners. And you can see that homeowners, the contingent commissions in my mind, have the biggest impact because the line jumps around the most. But you can also see that it feels like it's headed downwards. And I think some of the alternative distribution strategies may be behind that. But it's the kind of thing where, as we go into this, being aware of this data is helpful, if nothing else. It may ask you to ask questions or make sure that you're getting the commission that you think you deserve by knowing what the marketplace is. So Jason, anything?
No further questions. So you have one more section, or?
Yeah, just one more. And this is just I always like to use this example because it's not an independent agency company. This is public information. This is not for or against Lemonade. I don't pay particular attention to Lemonade. I just have to pick a company. They're in the news a lot. They were in Insurance Journal today that their underwriting results are improving, something to that ilk. But what I want to do, and it only is a 1 or 2 minute exercise in doing it, is making sure that you're aware as agents that is what we look at through an aggregate lens. It was the idea of a member agent and one of the state executives who was in this program where we created this report the first year. They said, well, can't you, Paul, take the data and just turn it around and give it to us in the exact same way that you're giving it to us in aggregate for an individual company? Of course, the answer is yes. And so this is just a quick example of what you might keep in the back of your mind that's available. Lemonade, for those of you who don't know them, a company that started in New York, their attributes are publicly available. So we can see how they describe themselves. What lines of business do they write? What premiums do they write? What's their largest state and what's their loss ratio? So given that we're at the end of our time, I'll hit this. So they're licensed in 42 states. That in and of its own right is interesting to me, that they've got a broader footprint than I think of them. They are not rated by AM Best. They are rated by Demotech. They list themselves as a managing general agency marketing type. They do, I can tell you from looking at them a little bit, they have an independent agency, they have an agency subsidiary, and that's probably how the premiums make it to that entity, although I don't know that. I'll be very careful to say I'm guessing that. Their domicile is New York. And then of course, here's their top 10 premiums. Very easy to grab, like where are they big? And lo and behold, Pennsylvania. And they're very active. I do know this because I've seen quotes and been asked about them. They're very active in the habitational space with their renters product, the multifamily habitational. So what else can we look at as we run out of time? We can look at their lines of business. Obviously, homeowners is where the renters product falls, but they're also into pet insurance. And that makes a nice point to all of you that inland marine is not it's not contractors equipment exclusively, and it's not Rolex watches exclusively. It's a lot more than those two things. Pet insurance and travel insurance falls under inland marine. And then they've got a little bit of a slice on the national in private passenger auto. And if you've been following the news, you know they've made an acquisition to expand into private passenger auto. And then just not to make any point in particular other than, yeah, you can look at their calendar year loss ratio and their premiums nationally, but you can also look at it for Pennsylvania and pull the data. So that's part of what's grown out of this endeavor, and it's not even an official product, but I throw out to the webinars I've done, because it's been a great conversation for me. If there's a carrier you're really interested in and you want to play around with my snapshot tool with me, until it gets to be overwhelming, and it hasn't so far, shoot me an email. I'm curious about this carrier. I can run the snapshot and we can talk about it on those very basic things. And oftentimes it sheds a different light, like, oh, I didn't know they were in farm owners. I write farms. And then suddenly there's a different relationship with the carrier. The last thing on there is I do use Alert, and I've been a great and good friend of David Paul at Alert for a long time. They do a very numeric score of almost every insurance company. So if it's not rated by AM Best and it's NR with even Demotech, I can turn to Alert and what's the numeric score on risk-based capital and things that they measure. So Jason, that was a sprint to the finish.
That was a sprint, but you did it. And,
yeah, we did it. We talked more at the beginning than when I did my run through. So.
Well, and a couple points just in conclusion. One, we're only scratching the surface here. We wanted to give you some highlights. We continue to work with Paul to closely analyze this. And look, you guys, attendees helped us look at some trending and help us focus on some things. So in Delaware, what's going on there, I really like the distinction of umbrellas, personal and commercial, because we're hearing reports from agents that there's some significant growth there. So if we can extrapolate that. A couple points. This is data that is accessible, but I'm not sure anybody wants to get into it and spend the time that Paul has. So that's the value here. Is IAMB, I believe, is the only organization working with Paul in order, along with our other sister affiliates, but to really drill this down and get it specific to independent agents. So that's the value here, is we're looking at this, we're analyzing this, and we think it is value to you guys. Provided a link to the report. That link goes to our resource page. If you scroll down, you will see market summaries, and that's where we will link to each of the state-specific pages. It is password protected. This is a member-only benefit. So if you need help with your password, please just reach out to us, iab@iabforme.com. Send us an email, call into our 800 number. We'll get you your credentials, but it is password protected. Those reports are live on the resource page. We will be sending an email with a link to this recording and also with a link directly to those pages. And on your screen right now, Claire Pantaloni, our Vice President Advocacy, is managing this process with Paul. She spent a lot of time working with Paul in order to make sure this is clear and concise for our members in Pennsylvania, Maryland, Delaware. If you have any questions whatsoever, please contact Claire either at this phone number or email. And as I said, feedback is helpful. If there are some distinctions or anything you want pulled out, let us know as we continue to work this. But this is just the beginning. We think data and specific data in market summaries is important to our members, to our partner carriers, and this is something we will be focused on and working closely with Paul on. Paul, thank you so much. One, for the partnership. Two, for this presentation today. Extremely helpful. We will be talking a lot more, I'm sure, and I think members are going to be reaching out on this. We will be sure to get you questions, comments, and anything as it relates from this. But thank you for your time today. Thanks for your work on this. And with that, we will wrap it up. We appreciate you attending today's webinar. Look for further information coming to your inbox. And again, any questions whatsoever, reach out to us and we will make sure to hit it. Paul, thank you.
Thanks,
to our members, to our members, have a great rest of the day, and reach out if there's anything that you might need. Thanks, everyone.